Hi, welcome to the Image Plus Consultants Limited Financials Review. They have a prospectus out now for their IPO, and in this video we're going to be breaking down the financials. Well, we'll be going through them. That's what we're going to do today. In a previous video, we would have gone through the prospectus at a high level. So if you missed that review, be sure to check that out. And on Thursday of this week, in another video, we're going to have the interview with the CEO, Keisha Anderson. So definitely check that out as well. But in this video, we're going to be going through the numbers, right? So if you're not a numbers person, this may not be the best, best video for you, but we're going to try and keep it as simple as possible. We're just going to be going through the financial statements, try to understand some of the trends that may be occurring in the business, dig down in the notes a little bit to see if there's anything additional that we didn't get from the first review. And so this will help us to understand the business a lot better. So at the start of the video, I'm going to do the recap of what we did in the prospectus review, which is talk about the offer, talk about what they're trying to raise, the use of proceeds, and then we'll go into the financials, right? So hopefully you'll find value in this video. If you do, be sure to give the video a like and subscribe if you're brand new to the channel, and let's just get started.
Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N. Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn Grow Invest.
All right, welcome back. Let us pray. Thank you, Lord, for this day and for the ability to produce wealth. We pray, Lord, that you'll give us wisdom, knowledge, and understanding for us to be able to make wise investment decisions. In Jesus' name we pray. Amen. All right, everyone. So thank you for being here. I'm going to just do a recap, as I mentioned, of all the videos that we'll be covering for this IPO. So yesterday, we would have done the prospectus review. So that's the first video that you're seeing at the top. That's what we went through yesterday. If you missed it, be sure to check out that video. Today, we're doing the financials review. It's going to be focused on the financial statements. We're going to try to understand the numbers a little bit better. And it's all going to be from within the prospectus, right? We would not have gone through any separate analysis. We're just going to be looking at it and trying to understand it a lot better. Then on Thursday of this week, we will have an interview with the CEO of Image Plus Consultants Limited. So that's going to be our IPO coverage. We believe those 3 videos should help you get a good understanding of the company, what they're about, what things you may need to take note of. And of course, speak to your licensed financial advisor before you make any investment decision. Okay? So let me do an overview of the offer itself. Let me just bring that up. So they are they're issuing 247 million new shares, seeking to raise about 495 million. These are the 4 pools. So if you're not a member of any of the reserved pool, then you'd have to apply through the public pool, which is 182 million, or 73.78% of the newly issued shares. These are the pools broken down further. So the employee reserved pool would be for permanent employees and directors of the company. Key stakeholders would be the referral doctors, any suppliers that are identified as integral, and consultants. And then finally, the broker reserve pool. And the broker reserve pool is standard, right? So anyone that is affiliated with any fund or collective investment scheme that's affiliated with the lead broker, in this case, that's JMMB. And finally, this is the highlights. So the prospectus was released on December 16th. The opening date is December 28th. And usually you want to make a decision before that date because you're not sure how long it's going to be open for. The closing date is scheduled to be January 11th. Minimum is 5,000 shares. So really they're saying it's a minimum of 10,000 Jamaican dollars to apply, plus the standard fee of $172.50. The subscription price is $2 per share, and then you have those remaining days to take note of as well. Okay, in terms of the use of proceeds, and again, this is important as we look at the context of the company, they're seeking to raise funds for three purposes, right? First, they want to acquire a property to be identified in Kingston. They want to procure new equipment for their additional location that was opened in Ocho Rios, and they want to expand their offering to offer additional interventional procedures to capitalize on that growing industry or that growing segment, right? So those are the highlights. So what we're going to do is look at the prospectus, focus now on the MD&A and the numbers, all right? So let's bring that up. So let me know your questions as they come in, and I'll try to get to them throughout. So the MD&A is on page 76. Let me save you from seeing me endlessly scroll. So just 1 second. Okay. All right, so what we're gonna do is go through the financial data here. Okay, so we'll be looking at from 2018 to 2022, right? So this would be their financials. So we'll be able to go through them, just kind of go through the numbers, go through the notes, etc., to try and explain each. And as I said, if you have questions, just post them in the chat, and I'll get to them as I go through. All right. So this would be their balance sheet from 2018 to 2022. So we see where property, plant, and equipment would have grown during that time. And again, based on the industry, that is definitely something that you're gonna see as they invest in new equipment, invest in maybe acquiring a new location, etc. Right? So that's gonna be something that you may see more of as you go through. In terms of current assets, what we did mention in the overview is that we're looking closely at trade and other receivables. That is something that we would need to watch for this company. As you would have seen, the receivables would have grown from, let's say where it was in 2019 to where it is now. Now they did mention that they have partnerships, for example, with the ministries, insurance companies, etc., that may lead to maybe slow payments, but that's something that, of course, maybe it may not be anything they can do much about. It's just more the managing, because sometimes and if you've ever worked with like a government agency or a customer, sometimes the process to get paid can take a while. So it's really whether or not there's going to be over concern in terms of their ability to collect those monies, because sometimes it's not a matter of whether or not you will be paid, but how long you will take to get paid, right? There's also on the liability side, so borrowings would have seen for 2022 would have been 40 million. Trade and other payables stood at 76 million. And in terms of income tax payable would have been 25 million here. We did understand in terms of, going forward, since you're going to be listed on the junior market, that income tax would not be due for the first 5 years. Then they'd pay a portion and so on all the way up until year 10. So that's something to know, that they will see savings in that regard. So let us go to the cash flow statement. Well, I don't think we looked at, sorry, we didn't look at wait, did I miss it? I said I wouldn't scroll, sorry about that. Didn't I not see? I'm sure they had revenue here somewhere. 778. Was I imagining that? I'm sure I saw revenue somewhere. Here we go. Sorry about that, guys. Okay, so you notice that, right? So when I zoom in on this page, we don't see. That's very interesting. So when I zoom out, it's there. When I zoom in, it's not there. That doesn't make sense. So let me see if I can find the financials on another page. Sorry about that. Let's look at the cash flow in the meantime, right? So in terms of profit for the year, and this is information would have taken from the profit and loss anyway. So it would be 113 million profit for 2022. So would have seen a big jump in profitability from 2021 to 2022. So that's something that we definitely want to do a comparison for the revenues to see what would have led to that. And then we see adjustments for the different items, because remember, not everything would impact their operating cash flow. So those things are accounted for here. Things like receivables, etc. So cash used in operations or net cash from operations would have been 96 million. So we're seeing there. Then investment activities, as we see investments in property, plant, and equipment for the past 3 years. Would have seen investments being made as well. So that's normal to see expenditure in terms of how the company will invest to try and grow either property, plant, and equipment or other types of investments. That's what we typically look for here. And then cash flow from financing activities. So how they might have seek to finance the business, how that generated, how that brought in cash for them, etc. So that's what we're seeing here. So they've gotten proceeds from borrowings in 2021, and they would have repaid those, right? So that's what you're seeing in terms of the negative figures there. All in all, cash provided by financing activities would have been an outflow in terms of those payments that they would have made of 41,900,000. Okay. So let's kind of go through the different sections of the MD&A to see if we can get an understanding of how their own commentary on these things, right? So it's saying here the MD&A is prepared to enable prospective applicants the ability to assess the financial performance of the company for the financial years prior to 2022, and it's saying the information that is displayed is going to be consistent. That's standard stuff, right? So let's start with the overview here. They're the leading provider of freestanding diagnostic imaging services in Jamaica based on the number of locations and annual revenue. So that they're saying here makes them leader in terms of the industry in which they operate. Their facilities provide physicians with imaging capabilities to facilitate the diagnosis and treatment of diseases and disorders, and may reduce unnecessary invasive procedures, often reducing the cost and the amount of care for patients, right? So they have developed their medical imaging business through organic growth and derive all of their revenue substantially from the fees charged for any diagnostic imaging services performed at their facilities. That's how they make money. So everything that we'll be looking at is going to be based on that. Okay. So they're mentioning here about the impact. So the impact from the pandemic. So what we're seeing here is that numbers were primarily impacted by the fact that there were shutdowns, etc. And what we would have seen is a drop in terms of their numbers, in terms of scans performed. We would have noticed that in our initial review. We'll get to those numbers soon. So we would have seen a reduction here. That's what they're mentioning in terms of staff availability and patient volume. So that's natural. So let's see here. It says here, even before the pandemic abated, the company saw a return to pre-COVID-19 levels of performance, which ultimately surpassed any prior year's performance, right? That's what they're saying here. Even before we fully went back to normal, they would have started to see a recovery. And we see that in the number of scans done for 2022. Okay, because remember their financial year ends in February. So 2022 financial year for them started March 2021 and ended February 2022. So what they're saying here, the number of scans that they did for their 2022 financial year would have started from March 2021, right? So that's what they're saying there. So so they grew through acquisition here in terms of new equipment. So a new CT scanner at Winchester, which was installed towards the latter part of 2020, and they would have done minor renovations for all locations, and their revenue here would have been derived from a mix of payers. That's what you're seeing here. So it's saying private patients, health insurance company, and the Ministry of Health. So they believe that their payout diversity mitigates their exposure to possible unfavorable reimbursement trends with any one payer class. Their service fee revenue net of contractual allowance and discounts and price concessions for the year is what we're seeing below here, right? So that mixture here, and you notice private patients make up 56%. The issue that you would have here, and this is what I thought about, this is not the type of service that you can build repeat customers, right? So it's not like those 56% that made up of the patients are going to be recurring patients each year, right? So there's no way to really, this chart may not be reflective of what it will be every single year, is what I'm trying to say. So it's something that, you know, you just have to, it's more about, as I would have mentioned on the other video, the way that they would differentiate themselves is either with their relationships or partnerships, service delivery, you know, or, you know, things like that. But there's no way to have like, there's no way I see for this industry where you can guarantee maybe the number of patients you have or the split in terms of revenue. That's not something that they can control, right? All they can do is look at maybe the total number of persons who need these services on a yearly basis and try to capture a certain amount of the market. Okay, so it says here, the very first line here says, we typically experience some seasonality to our business. During the first quarter of each year, we generally record the lowest volumes of procedures and the lowest volume of revenue than any quarter. What that means is that their quarter from March, April, May, that's typically their lowest quarter, which means if you are going to invest, you need to watch that quarter, because if that quarter outperforms maybe the previous year's quarter, then that means that they're likely going to have a very good year. Okay. So this is primarily the result of the holidays experienced in the first quarter, March to May, which sees 4 holidays over the 3 months. So you have like Ash Wednesday, Good Friday, etc. Those holidays impact their business. The advent of on-call services at Ocherius has impacted that as well. They're mentioning there. Their services include what I've mentioned those before already. So this is what we were focusing on before, the number of scans done. As I said, this business, I don't think would have like repeat customers. So you would have to maybe look at, let's say on average, the trend for number of scans done across all businesses or across all industry for maybe the last 5 or 10 years and maybe see how that is trending. Now, I think data from maybe the Ministry of Health or other studies or things like that may shed some more light on this, but I'm not aware of any such. If you guys know, just let me know. But what I'm saying is it's not like they can, it's the market is there simply because of the nature of what they do. And I think it's important to just understand that number, it's not like you can necessarily predict a growth rate, or at least I don't think so. Maybe when we meet with the CEO, we hear something different, right? So revenues would have increased by 165 million or 27% in FY 2022. Would have seen that they would have had growth in their net profit for that year. So definitely revenues would have had an increase as well. It says the increase was driven by increased scan volumes in all of their facilities, some of which is due to the Ministry of Health ECHSD project. So I'm actually not familiar with that project. Let me see if I can find some information on it now. Let me bring that up. All right, so I'm doing a quick Google search. I'm not seeing anything about that project. Let me see if I can search the prospectus as well, if it's mentioned or defined anywhere else. Okay, one of one, right? So I'm not sure, right? But maybe we can ask about that. If somebody here works at the Ministry of Health and can explain what that project means, I'd appreciate it. But I'm not familiar with that project, right? But they're saying they would have seen an increase due to that project. So it would be important to understand, I guess, the lifespan of that project, if there's a revenue amount involved, etc. Right? Or it could possibly be a lifetime partnership or a project. We don't know. Okay. It's saying that their Winchester location contributes to the largest share of revenues across all their facilities, while the CT generates the most dollar value revenue per modality. Right. So they're telling you based on location, Winchester contributes the most, the largest share of revenues, and the CT in terms of that particular service or scan generates the most dollar value revenue. Okay. In terms of their cost of sales, that's what we would have seen here. We went through this already yesterday. We're looking at so lab personnel salaries. That's something that's based on the specialized nature of the service. This is something that it may cost them a certain amount to attract and retain these specialists. You have things like repair and maintenance for the machines, and then you have this one says professional fees, so we can check to see if that is defined later on in terms of the notes. Let me see here. It says the increase in medical supplies and imaging material is a result of the number of scans done. So what it's saying here, this imaging material cost, the more scans they do, the more that cost will increase. So lab personnel salaries will include the salaries for the different roles that they would have. Radiologists are paid a set percentage of each scan read by them, and as such, the greater the volumes of scans done, the greater they will be paid. So as revenues grow, these costs will grow as well. Okay. I don't know if we can maybe calculate a percentage or maybe look at the number of scans done or something like that. Let's see. Shelly, and you're talking about the fields for this table. I'm not sure, right? Because that I noticed that as well. Like some of the data is blank. I'm not sure what that means. Yeah, I don't know. Okay, let me see if there's anything else. Okay, and of course, electricity is going to be, I think, a significant cost for them based on the type of machines being used, right? So this was one of them that we're looking at as well in terms of costs. We mentioned the director's fees being something that we're going to be looking at in terms of how that cost is managed moving forward. They did mention a change in how that will be managed. That was mentioned yesterday. I'll cover it again later, but they did mention a change in terms of how that will be managed. And we see where salaries and related expenses would have grown. So they're paying 100 million more in salaries than 5 years ago. Okay, so that's something to look up. We also spoke about the bad debt that they had to write off. Now it's 5 million. So in relation to 777 million in revenues, to write off 5 million, I mean, that's not even 1%, but it's something that you do want to watch to see if it is increasing over time, because I went from 444,000 in bad debt to 5 million. Now, again, this is something that we're gonna ask about to see how that is being managed, but they did have a table on how their debt is classified over the different periods, whether 30 days, 60 days, 90 days, etc. Okay. So they would have mentioned that they're going to change the structure for how directors' fees are paid. So going forward, the directors' fees will be paid to each director at a normal and customary rate for publicly listed companies. I'm not aware of that rate, so we're going to ask about that rate. Okay. Let's see here. Our impairment expense, because it did mention an impairment provision here. That's what you're seeing here. It says their impairment expense is related to their trade receivables based primarily on the number of days that the receivables is past due based on the IFRS accounting standard. So so they're pretty much explaining that they had to make that impairment loss due to how long the debt has been due. Okay. Okay, so it's, if you notice here, and what we're doing here, guys, if you're completely brand new to this, we're looking at this document for clues, for explanations for the numbers that we've seen for the past 5 years. So that's what we're reading through to get more insight into the numbers that we see. Because you can't just look at the numbers without reading the notes, because the notes give context to the numbers, right? So it says in FY 2022, their insurance partners and the Ministry of Health will have resumed their normal operations. So payments that were made to us within the contracted period resulted in a write back of our impairment provision. We have collected 100% of the amounts billed to the Ministry of Health and our insurance partners for 2021 and 2022. So I hope that is clear to everybody what they're saying. So they would have been able to write back their impairment provision for that particular period, right? So that should give us some insight into what was shared earlier, okay? And the share of loss associate in FY 2021 relates to the company's 30% share of losses in its associate Winchester MRI. And so see note 5 for further explanation on that, okay? But I've gone through these already, so I won't go through them again here. Because I want to get through the rest of the MD&A first, and then we may focus on specific areas after that, right? Property, plant, and equipment is here. So land and building, leasehold improvement, motor vehicle, furniture and fixture, etc. Lab equipment naturally is going to be the most valued asset for them, and then computer and accessories being 8.1 million. Okay, so it's saying here in terms of investment in associate, they have a 30% interest in the equity of Winchester MRI, which is accounted for us as an associated company in accordance with IAS 28, and you can see note 5 for more details on that. Okay, let's see here. Yes, we're definitely going to be reading this part in terms of trade and receivables. So it says this comprises of amounts due from patients, insurance companies, and the Ministry of Health, net of expected credit loss, deposits, amounts due from employees, and other receivables. We maintain a robust system of follow-up to ensure that our receivables are collected on time. The majority of our trade receivables as at February 28th, 2022 are due from insurance companies and the Ministry of Health, for which they have a 100% collection rate. So what they're saying is the receivables that they're showing, they have a history of a 100% collection rate. So they're expecting to recover all of that money, right? So that's very important context to what we were speaking about yesterday. All right, financial investments would comprise of investments held at JMNB. Cash and cash equivalents would be including that. That's pretty straightforward. Their borrowings include 5 non-revolving loans from BNS and 2 non-revolving loans from Sagicor. The loans were used to acquire imaging equipment and motor vehicles. The loan carry interest rates of between 7.5 and 10% and are being repaid monthly. The loans are secured by a combination of debentures over assets of the company, charge over the imaging equipment, real estate, and motor vehicles, right? Standard stuff there. This is trade and other payables. in terms of what they would have due as at the end of their last financial year. But I've gone through this yesterday in terms of the balance sheet summary. Let's just see if there's anything that stands out to us here. We looked at the cash flow as well. So let's see what the notes are saying. For this one, it's saying the company has generated positive cash flow from operations for each of the 5 years. That's from 2018 to 2022, based primarily on its consistent annual net profits after tax and prudent management of working capital. Net cash used in investing activities would comprise of acquisitions of their imaging equipment, property, motor vehicles, and computers. And net cash provided by financing activities would comprise from repayment of bank loans, directors, loans, etc. Pretty standard stuff there as well. So it's saying in terms of liquidity and capital resources, they operate in a capital intensive, high fixed cost industry. Very important to note here. That requires significant amount of capital to fund operations. In addition to their operations, they require a significant amount of capital for the initial startup and development of new diagnostic imaging facilities. So what this may mean, and this is a clue that we get from this here, if they should seek to open additional location or maybe to acquire a competitor, they may have to do a fundraise, right? Depending on the timing and the cost. All right, let's see here. In order to better manage our capital and liquidity, they've traditionally used a mix of our cash resources and commercial bank loans to fund capital requirements. As at February, they had 51 million in cash. Okay. And they're raising 495 million now. Okay, let's see if there's anything to highlight here. Directors loan, directors fees, management remuneration. All right, I don't think there's anything there. So what I'll do now is kind of go through, what we typically do next is kind of go through the notes to see if there's any more detail to what we might have read already. All right, so I'm just gonna scroll through that. So bear with me. I'm just gonna scroll and then zoom in on anything that seems like we need to pay attention to it. Okay, so this would have been for their second quarter. Yes, I knew we would have seen this somewhere. So this is gonna show us now the 6 months for the current financial year that they're in. Very, very important to look for. So we're already seeing that for the 6 months for their 2023 financial year, they would have done more than 50% of last year's numbers. Okay, so gross profit is up, and ultimately we're going to be looking at net profit, but we'll get there. In terms of administrative expenses, those have increased by 13 million for the same period. Depreciation increased by 3 million. So their operating profit. So you notice a difference here. Let me see. Well, their gross profit would have been significantly higher. And so the operating profit would naturally be higher as well. In terms of their profit before tax, it would have been 152 million. But if you notice, and this is something that they would have said, so typically their Q1 is their slowest period. But with their Q1 and Q2 for FY 2023, they would have surpassed what they did for the 6 months last year. Remember, they did 777 million for the entire year last year. In 6 months, they did 554. So it seems if you average the numbers for the quarter, let's say they did 280 million per quarter. At that pace for Q3, they would surpass all of the revenue that they did for last year. Okay, that's what this is saying. So the profit for the first 6 months is almost 4 times what it was for the first 6 months last year. Okay, so So this is definitely a good sign in terms of how they will be for this year. Okay. In terms of they should be able to tell us their trade. So so look at this here. So for the first 6 months, in terms of trade and other receivables, that was 99 million. Trade and other receivables here are 247, right? So they still would not have collected all of the money, but it's there. And as they mentioned, they're expecting a 100% collection rate. Okay. But just bear in mind that number has grown since what it was showing the previous year. Cash and cash equivalents, 23 million. And retained earnings would have grown from 261 at the end of the year to 356 million. Their borrowings would have grown as well. So it's now 126 million for the 6 months. So we should be able to see some context as to those borrowings a little later. Trade and other payables are relatively the same. Okay. In terms of cash flow for the first 6 months, so we would have seen their entire profit for the year 2022 compared to the first 6 months. So they would have realized more profit there in 6 months than they did for the entire year. That's a good sign there. In terms of cash flow provided by operations, let me see the major impact on this. So their increase in receivables, you'd have seen that. And depreciation would have been 19 million here. In terms of purchase of property, plant, and equipment, that would be 88 million that they would have spent in the 6 months. And they would have paid a dividend. So they did announce that they paid a dividend on June 30th of 30 million. That's what we're seeing here. And they would have borrowed 73 million in the first 6 months for this year, right? But the use of proceeds for the IPO does not speak to any repayment of debt. So you can assume that debt will be paid out over its normal period. All right. So their cash position would have decreased, but of course, for the next statement, what you're likely to see is the IPO fund. So their cash position, depending on when it used, should look fairly increased. And we spoke about this yesterday in terms of how they're planning to grow the business. So I'll recap it here in case you missed it. So they're saying they're planning to increase their footprint through acquisition of other performing entities. Hint, hint, hint. Increasing modalities offered. So they're going to expand their range of scans and services offered. Continuing to attract competent and highly regarded talent. Those are the different skill sets that they would need. Of course, that comes at a cost. And then managing their core efficiency. So they'll try to be efficient as possible to be able to manage costs going forward. Okay. Let's see if there's anything else that we want to highlight on here. All right. So we're looking for here, and I'll just say this quickly. We're just looking for any additional information that may give us some insight into the company. All right. So we're not going to go through every single detail. That's not something that we can do in an hour because the target is 1 hour. We're gone 38 minutes. So there's a few more minutes while we go through the notes to see if there's anything that is worth mentioning. Okay. If not, then we'll just kind of recap everything that we spoke about already. Forgive me, I'm just trying to save you from all the scrolling. So I'll take some of the questions in the chat shortly. So keep them coming if you have any for me. All right. But I've gone through the loans already, as in the trade and receivables. We went through that already. But these are showing the notes for the year ending 2022. I wanted to see if there were any notes for the 6 months. I'm not seeing those. For those who want to see what I'm reading through, this would have shown a breakdown of, let me zoom into this one. This would be a breakdown of their expenses. So their cost of sales, so medical supplies, imaging material, and lab personnel supplies. That's a breakdown of that. Repairs and maintenance, patient gowns, professional fees, electricity. So their largest admin expense, as we know, would be the director's fees and the salaries. And it says here note 17. So we're going to check out note 17 to get more details on that. Everything else, telephone expense would probably be the highest number apart from that. So note 17 is right here. So salary and wages, 163. I thought they would have broken it down somewhere. Salary and then statutory payments and then other. So that doesn't really, yeah. I thought they would have broken it down by category at least. That would help us to understand which area. I suspect it may be the radiologists that get paid the most. But yeah, it's just for our understanding. So I'm seeing if there's anything else. We spoke about the risks yesterday. There is risk with every company, so just bear that in mind. Let me see. Let me just go back to zoom out so it's easier to scroll. And then I'll zoom in if there's anything that's worth zooming in for. This will be for the 6 months, and I'll see if there are any notes for this one. Okay, so the rest of it is just how to apply. Okay, so I think, and this is from the prospectus yesterday. Okay, cool. So that's why you can always watch the replay. You need to turn on notifications for our channel. We're doing 3 videos this week on the IPO. We did the prospectus review yesterday. We did the financials review today, and then we're going to interview the CEO on Thursday, right? Let me see here. L.E.A.R.N is saying the need to expand to a one-stop shop, medical complex imaging and laboratory services. Well, I'm not sure I necessarily agree with that, because I think having a particular segment of the industry is good, because if you run to a full medical complex, full laboratory services, etc., that may extend them outside of their area of expertise, and it may not be worth it, right? It depends, right? What happens when MOH fix their machines or buy new ones? I don't know. Okay, so I think Omar is saying it's where the Ministry of Health outsources imaging services. So Elaine is asking what happens if they should. Well, that's a very good question. We need to find that out. All right, Shelley, and I think I addressed this already in terms of the fields being blank. It's something that we can ask about. Yes, Aline. So increase in lifestyle diseases like diabetes and hypertension in the population will cause an increase in sales. So I mentioned this yesterday as well, in terms of the growing population, in terms of, persons, for example, the longer you live, the more likely you're going to need to do at least one scan every few years. And as I said, doctors are typically reluctant to treat you now without you doing a scan. The last time I had to bring my mother to the hospital and we wanted to know what was wrong, the only way we could get that conclusion is if we paid for the x-ray. When the x-ray wasn't clear, we had to do a CT and things like that. So those scans are becoming more popular. Now, the question is there, if a person needs a scan, where are they likely to go based on price, availability, convenience, etc., right? So they do have 3 locations in Kingston and St. Andrew, but now it comes down to the referral doctors, I think, right? Who are the doctors referring? And I mean, it would be good if we could maybe see I don't know the detail because we've never reviewed Elite Diagnostics before. So we may need to maybe have a look at their numbers. I don't know if they provide the same detail, and maybe see if we can get a different context on the market. So millions on the loan book and they were paying out nice sums to directors. Maybe I was reading incorrectly. Yes, I think I might have addressed that already, right? So yes, Shelly, and dividends, once approved, so they'll review it twice per year. You're paying up to 55% of net profits for the first 2 years. Okay. Yes. Seems we have a similar issue there. Okay, this question was from Alicia. If one has an EMA account with JMB, would that qualify? No, it doesn't, Alicia, unfortunately. You know, that's a very good question, but no. Okay. Elaine is saying, pay off debt, buy property, buy equipment and acquisition. My question is, will the IPO money be enough? I really don't think it will be, right? I noted it saying that they're in search of a property. I don't know if they've found one yet. If they have not found one, the longer they take to find one, the likely more it will cost. They also didn't give us a breakdown as to, for example, of all the money raised, how much is going to a property, how much is going to equipment. So I'd love to ask for a breakdown of that. So we hope to ask the CEO that question on Thursday. So we'll see. Omar is saying still won't be able to cover the amount of cases that needs imaging. I agree, right? And I don't know if the Ministry of Health would necessarily want to, if they can outsource it, the government would typically do that, right? Some are saying KPH alone would require a great deal of imaging services. And listen, I can relate to that. I don't remember which family member needed a scan, and all I kept hearing is machines are out of service, machines are out of service. So you had to go to a specific place to get the scans done. So that's going to be an important thing as well. Yeah, so just in case persons might have missed it, let me go to the how to apply. Currently, it is just on JMB Moneyline. So I hope persons are aware of that. Let me see if there's anything else that's worth noting. Okay, so I don't think so, and I think we can probably wrap up now. So, I mean, I think they're shaping up to have a good year in terms of what the first 6 months showed. And as they mentioned in the prospectus, their first quarter is typically their slowest one. And yet we see for the first 6 months, they would have exceeded the profit for the 12 months last year and would have exceeded their revenues for the first 6 months by about 180 million. So those are good signs, right? Good signs already. The concerns would be salaries. The concerns would be directors' fees and the impact on overall net profit. The industry will have certain risks. I mentioned that before. I'm not sure how you can mitigate against those risks. So those are things that we can ask, but it's an industry that has risk built in, right? So I'm not sure if you're not comfortable with this type of company, then make your investment decisions accordingly. But I think based on what the first 6 months show, they're shaping up to have their best year yet. And in terms of dividends, if you want to understand what they could potentially pay out in dividend, then all you have to do is look at the net profit, calculate maybe 55% of that, and you'll have an idea. Okay. So I hope that answered some of your questions, guys. Let me know your thoughts on the review. Let me know if you have any additional questions, and I'll try to cover them as best as I can. I want to thank you guys so much for being here. Please do like the video. We do have a challenge with persons liking the videos. So please, oh, I never knew that. So Adrian is saying Elite's IPO was $2. I guess they're following suit. That's interesting. I never looked into Elite before. Never came up. The only only type of company, even remotely related, that we've covered was indies. And we didn't use the same format that we use now. So it definitely would make sense. So we need to do 2 types of review videos next year. We need to review Elite and Apex together, and RPL and FESCO together. So we definitely need to do that. Yeah, but I think going through Elite would give us, let me actually see if I can do this now, because I have 9 minutes. So let me try and bring up Elite's latest report and see how they compare in terms of maybe revenues, at least from that perspective. I'm not going to show you guys what came up on my screen just now in terms of the company that I'm looking at. I'm so happy that my screen is not being shared right now, because you guys will see my stock to watch for next year. All right, so let's look at Elite's latest report. All right, let's see. This is for their first quarter. I think we may need to look at their whole financial year, because I don't think we just want to review 1 quarter. So let's look at their entire financial year and see. Okay, so in terms of their full year, I like to open it in desktop. So in terms of their full year, they would have surpassed Elite in full year revenue. So for 2022, Elite did 624 million, and they would have done 777 million. So they would have exceeded Elite's revenue by 150 million. Okay. In terms of profitability, their profit for the year was 113 million. Elite's was 48. Okay. So bear that in mind. Let me go through here. I want to be able to show them side by side. Sometimes I don't know where I'm. Sorry about that. I think this is the right place. Yes. Okay. So profit, 113 million, 48 million. Okay. So hopefully you guys are seeing that. I don't know if Elite would have given the same detail, because this is not the annual report. This is just the audited financials. So maybe we can get some more context there. But in terms of revenues, in terms of performance, they would have done 150 million more for 2022. Okay. So let's see what Elite would have been showing for their first quarter. Their first quarter would have been 187. So if we look at what Apex did for their first half, which was 555 million, half of that would be about 280, right? And they did say Q1 is their worst quarter, right? So if you, I don't know that same context for Elite, they would have done better in their Q1 than they did the previous year, and for their entire year, as we mentioned, did 624. So at 624, if you were to divide it by 4, which you wouldn't necessarily do, that would be what, 158 per quarter. So they would have beaten that average here. So this, let's say that we do a 190, 380, 760. So if all of their 4 quarters are like this, they wouldn't beat what Apex did for all of last year. Okay. So bear that in mind here. And they would have done an EPS last year of 0.14. The EPS for the first Q is that. So I would have loved to see, let me see if I can find your annual report to see if I can get some information. I don't know when it is expected to be released. Yeah, we have a recent annual report. So, but let me just check to see if they give maybe context on the industry, etc. It's very unlikely but let me check. MD&E. I'm just looking for industry data, right? Because that's what we're trying to determine here, how they would do in terms of this is how their revenue would have grown over the years and net profit, etc. Yeah, I'm not seeing what I would want to see there, but I mean, I would have already seen in terms of if you try to compare them side by side again, just from the revenue done for the year and what they would have done for the first quarter, Apex would have been ahead of them there, but I can't really make that assessment in 5 minutes, right? What I'm interested to see though, which we all know, which we're all expecting, is to see how the companies trade in comparison to each other. That I think is going to be an interesting dynamic where we are going to see, because this is how year to date, this is Elite, would have had a peak of $4.37 for this year, coming down from a low of about $2.58. So their peak for the year is 489, and they would have been year to date up about 15%. But of course, if you would have bought it here and sold it here, is that 100%? 258, 5.2. See, almost would have gotten 100% in that 2 week span, right? And you see massive volumes right there. So let's see if that was triggered by anything. It was in April. We're seeing if there was any announcement or anything like that. Connected parties sold. Not seeing anything there. Yes, Elaine, I'm trying to give you back your 9 minutes. Trading in stock units sold 34 million units of stock. Connected parties sold. Yep, these are all selling. So maybe top 10 ownership, you'd have seen some movement there. That's what I'm kind of thinking happened there. Okay. All right. So in terms of volume traded, let's see for the past 6 months. Somewhere about 500,000 units, but for the average day, you're not seeing large volumes here. I suspect it may be similar, not the same. We won't know until the list, but I'm guessing that the company might have interest from institutional investors. So, I mean, who knows? We may see like either something like a stock split or something like that. So for them here, shares outstanding for Elite is just 353 million, right? So it's not going to be the same number of shares outstanding. So, yep. All right. So we will do a full review of them both. I promise you, we'll do that in the new year. But yeah, I hope that kind of addresses the initial questions about how do they compare in terms of revenue. We're seeing that Apex is currently leading in terms of that department, in terms of profitability as well. And they would have, I would need to do a full review on Elite first, then I'll do the comparison between the two of them. I think that'd be the best approach, really. Okay, guys, so I want to thank you so much for being here. Thank you for liking the video. Thank you for subscribing to our channel. If you have any questions, you can send them to us before Thursday, and we'll ensure that it's covered during the session. Any other questions, you're free to join us on Telegram. Let me actually share our Telegram group link with you right now so that you can join us on Telegram. And look out for announcements coming up soon. We have our coaching program that's coming up next year. Would have had our Grow Your Wealth conference. Again, the replay is made available, so you're free to check that out. And for anything else, you'll be notified as soon as possible. I really hope you enjoy your holidays. We'll see you one more time, which is this Thursday, and then we'll have some select videos coming out from the Grow Your Wealth conference going into next week and the week after. Of course, if any offer comes out, that may change. So if not, we'll see you early 2023 after this Thursday with our stocks to watch for 2023 and some other videos that we have planned. All right. So enjoy the rest of your evening. I'll see you in the very next video.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N, Grow, Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest.